Hello, everybody. Welcome back to part 2 of lesson 6. Today, we'll be talking about how do you find a stock, the types of analysis, and some key indicators to look at. So, first of all, we'll be looking at how do you find a stock to invest in. Now that we have learned the different types of stocks, the different types of markets, we want to know how do you find the perfect stock to invest in. Well, research. Research is pretty crucial into finding a stock. You want to read the news, find an industry or type of stock you're interested in. Now, you can be looking at a lot of stock screenings or like these are like websites which will show you how the market is doing, how is each industry doing. Is the tech industry going up? Is the automotive industry going down? So, based on each industry, it will tell you if it's going up or down. And therefore, you want to read the news and find an industry that you think or hopefully will go up or something that you're interested in. You want to make sure that you're looking at company's financial statements, news article, and analyst ratings. A great platform is Yahoo Finance or the Yahoo website, which shows you a company's financial statements, its analyst ratings, and it gives you all the news related to the company. Or you could also use the Finviz stock screener. This will help you understand which industry is going up and down so you can have a better look at it. Second, then you will look at start small and diversify. You do not want to have all your eggs in one basket. You do not want to have one type of egg in your basket. You want to have different types of eggs. So you want to spread your risk across different companies and sectors. Now we'll be looking at the two main types of analysis: fundamental analysis and technical analysis. Fundamental analysis is like examining an apple from the inside out. Investors focus on a company's financial health, industry trends, and future prospects. They look at financial statements, the management team, and industry health. Technical analysis focuses on the stock price's history and trading activity. It's like looking at the apple's color and shape to guess its ripeness. In technical analysis, investors will use charts and graphs to identify patterns in price movements and trading volume. Now we will be looking at some common indicators. So before I look into the indicators, I just want to summarize that technical analysis will be looking at numeric data, whereas fundamental analysis is more likely to look at the news, the trends, some of the documents, and etc. So now let's start with the indicators. You have the PE ratio, which is the most common ratio known as price to earnings ratio. So it's the price tag on a company relative to its earnings. Am I getting the right earnings related to the price I'm paying for the stock? Second, you have is earnings per share, which is the EPS. This is the profit per share of stock. So if I buy one stock of this, how much profit am I going to get? Market capitalization is also known as market cap, is the total market value of a company's share. You will usually find this on the stock screenings or on websites. Next is debt to equity ratio. This is the company's financial leverage. Dividend yield is the percentage of profits paid out as dividends. Moving averages are the trend lines that smooth out the price fluctuations. So these lines will show you how the prices have been fluctuating across a specific period of time. Relative strength index is RSI. This shows whether a stock is overbought or oversold. Next is support and resistance levels. When you're using a stock screener, some of these would have the ability for you to draw some lines on a graph. They will give you a graph, such as, for example, let's say I looked at the Apple company stock and I said, give me the trend for the past year. So from that year, from part time A, so let's say January to December, it will show me the graph, how it looks, and then I can draw lines on it. And these lines are your support and resistance lines. Now, when I draw these horizontal lines, these shows whether the stock has found buyers or sellers. If it has reached its resistance level or it has reached a support level, you can draw those lines. So like for every top part or the bottom part. So these will get into the shapes of graphs. So for example, day traders use these techniques. They will draw horizontal lines on top and bottom to show support and resistance lines. So if it crosses the line, for example, then you're going to know that the stock price will go down. So this is where you get into candlestick patterns. You will get into learning these different types of patterns online. Number 9 is trading volume. These are the numbers of shares traded in a given period. Number 10 is analyst ratings. Insights from professionals who follow the company closely. On stock screenings like Yahoo Finance, you will see that Yahoo Finance is not a stock screening. You can use it to get data from the company. So when you use Yahoo Finance, you will get analyst ratings. These will show whether the stock prices is it recommended to buy right now, to buy later, or to sell immediately. And it will also tell you whether the price of the stock which is currently has it crossed the limit, has it crossed the expectations of the analysts. So that's a wrap on our introduction to the stock market. Remember, investing in stock involves risk. Yes, stock market is a high risk investment. So it's essential to do your research and consider your risk tolerance. Happy investing! Don't forget to stay online and look at our next videos. See you next time. Thank you.